Well, Happiest Mind is the new IPO which investors should certainly be watching out for. The IPO has already opened on 7th of September and closes on 9th of September. The IPO price band is 165 to rupees 166 per share. Briefly, in terms of the company, well, it is one of the next generation leading IT companies. It is focusing on seamless delivery of digital experience to its customers. Nearly 97% of its revenues comes from digital IT services, for instance, cloud, security, analytics, Internet of Things. This is compared to nearly around 30 to 50% of the traditional IT services. It also caters to quite a few segments. For instance, major contribution comes from Edutech, which is contributing nearly 21% of the revenue in FY20 itself. Secondly, Hitech, BFSI, travel, media and entertainment also are the segments wherein which contribute significantly to the revenue, anywhere between nearly around 17 to 21% as of FY20. It also generates revenue in terms of various clients. If you look at its clients itself, the revenue generating customer accounts for the company have increased by 1.6x to 25 over FY18 to 20 as per Motilal report. In fact, if you look at the strengths of the business, Motilal, for instance, the brokerage house, does see that they have a scalable business model across verticals, functions as well as geographies. Briefly, in terms of financials, well, the revenue which stood at nearly around 463 crore in FY18 has nearly doubled to nearly around 700 odd crore in FY20, and for the first quarter itself the revenue stood at 177 crore, which means a slightly over 20% CAGR in revenue growth over the last 2 years. The company did report a loss of 22 crore in FY18, but for FY20 there was a profit of 83 crore, and in the first quarter itself the profit has risen to 50 crore. In terms of the valuations, well, if you look at it on a diluted basis and annualized basis, valuation stands at nearly around 12x. This is annualizing the first quarter FY21 earnings. Again, briefly, in terms of the IPO itself, the IPO is a fresh issue. It's a combination of a fresh issue and offer for sale. The total IPO size is 700 crore with an offer for sale of nearly around 590 crore, and most of the funds that would be used, it would be used for meeting these working capital demand of the company. In terms of the geography wise revenue mix, a lot of the revenue, nearly around 77%, is coming from US, followed by nearly around 12% in India and 7.2% in UK, and hence, given that it has a huge amount of exposure to US, which is nearly 77%, that also poses risk, which is a geographical concentration risk. If you again go into the details of the overall verticals, well, as I said, it does have a well-diversified delivery model as well. Nearly around 79% of its revenue come from offshore and 21% comes on-site, and also they have been able to improve their onshore as well as offshore billing rate in the last 2 years. So yes, surely watch out for this IPO, as most of the brokerages do have a subscribed rating on this, and the IPO closes on 9th of September.